Hello and welcome to another video. My name is Exo, and in today's video we're going to be doing another stock analysis video. This time it's on Apple. Now, so we'll break this down like how we usually do. We'll have a quick look at the company, what it does, a bit of background information about it. Then we'll head over to Simply Wall Street and have a stock analysis of the company. And then from there we'll go and look at the balance sheets, the income statements, cash flow, all that great stuff, and end off with a conclusion. So without further ado, let's get into it.
I fight to live, I fight to strive. One day I'll have what I want in life.
Okay, so now we're on the Apple website. You don't really need to know too much about Apple, like everyone already knows what they do, but there's just some things that people might not know about. So obviously they sell the Macs, the iPads, iPhones, their watches, iPhones being their main source of revenue there. Then you got the Apple TV and various other accessories they have. You also have the App Store, which they make money off of. And then there is a Apple Card, which I'm not sure how much they really do this, because not really seen it until I looked on it. So yeah, this is just really what you need to know. It's just what they sell. Everyone knows Apple. This bloody logo right here, they've done a great job of getting this to where it is. You see this, you instantly know what it is. I have an iPhone right here. I've used iPhones all my life. All my family uses iPhones. They use Apple Macs as well. So yeah, it's a very established brand. They've done very well to get where they are, and their list of products is self-explanatory. Okay, so now we're on the Simply Wall Street of Apple. So we can see there's a company overview here, but we've already looked at the company. There's really not much you need to know. We can see that has a risk analysis, high level of debt. However, we can see with the cash flow later that this really isn't an issue for Apple. Never has been, really. So we can skip all this. These are just little news updates that you can have a look at. It'll sort of go into a bit more detail. I do read these myself, but I just don't have time in this video to go through each of these. So you can see shareholder returns over the years, include dividends. You've got 5 years, 492%, and then 1 year it's got 28%. This is pretty accurate. I'm kind of on that wavelength with myself, I believe. There you go, 23.48% on mine. So I need to add more money into Apple. It's just a bit overvalued for me at the minute, and I'm actually above my allocation for this company, so it's not really a problem. You can see how it's broken down into here. So this company is overvalued based on Simply Wall Street's analysis, and I would also have to agree with that. You find that with these type of companies, but the same can be said for Microsoft, and it just doesn't seem to bother these kind of companies. They're just fucking never ending. So here we're in the valuation segment, so we can see the fair value was calculated $111 with its current price $151. So like I said, it is overvalued based on this. If you can get it at a discount, then great, but Apple just doesn't seem to fall like this. You can have a look in Apple over in the 1 year. It doesn't really fall that much. It just likes to go up. So you can buy like dips like this, maybe, but it's never really had huge big crashes that it didn't recover from. You had this one obviously in April with coronavirus, but other than that, it's happy. Again, pricing to earnings ratio will then be skewed because it's overvalued. Price to earnings growth, again, large company, however it's still growing quite well. Price to book, again, overvalued. So now we can see the future growth of this company, and it looks like everything will be growing basically just at a steady rate. I predict these to be even higher than this, to be honest. Obviously they just want to be conservative because they can't see in the future, but Apple has some good things in the pipework with the Apple Car that has been mentioned a few times. They have hired people to actually work on that as well, so that'll be the next big thing for Apple if they do manage to pull that off successfully. So the annual earnings growth is considered to be small in the future, but industry is not too much higher anyway, and then forecast annual revenue growth is basically in line with the industry. Apple seems to have a habit of exceeding expectations anyway. The need to buy the newest iPhone or have the latest gadgets, something that is hardwired into Apple customers, so I don't see this being a problem. The future return on equity is going to be really high apparently in 3 years time at 135.1% compared to the industry of 21.2%, so that would be nice to see. When you take a look at the past performance of Apple, you can see that everything's basically grown in line with each other just steadily throughout the years. So you can see free cash flow is going up, operating expenses, the revenue is going up the most, so I predict this to be a continuing trend going forward, but time will tell. The past 5 years earnings growth has not been as good as the industry, but the last 1 year earning growth has been better than the industry. So if that's continued to go forward, then we are looking pretty promising. So again, we don't know until it pans out. Another good thing is the return on assets and return on capital employed are both high, with the company being 26.9% versus the industry at 9.1%. And the return on capital employed last year was 48.3% versus 28.3% 3 years ago, so it's doing better and manages money over time, so that's great to see. Now we can have a look at the financial health. So we've got short-term assets outweigh short-term liabilities. The short-term assets, however, do not outweigh the long-term liabilities. The long-term assets do outweigh the long-term liabilities, so it's not a terrible balance sheet. You'd like to see the assets, short-term assets, outweighing the long-term liabilities, but we can have a look at its free cash flow as well. As we can see here on the debt to equity history, now this company does have quite a lot of debt, high level here, with its equity being on a decline from 2018 to current. So maybe this is a worrying sign continuing forward if the equity keeps decreasing. The cash flow was coming up quite nicely and was going to actually surpass the debt here, but then it just sort of took a crash due to coronavirus. So maybe this can go back on the upward trend, but again, who knows. So you can see here that its debt is well covered by its operating cash flow of 83.4%, and the interest coverage. Apple earns more interest than it pays, so coverage of interest payments is not a concern. So that's where the amount of cash flow this company has is sort of helping it out here. This company does actually pay a dividend, quite a small one obviously, but this will increase in time unless they decide to reallocate capital to things like the electric car. But we can see that the dividend per share has been increasing over the years, so they have made an effort to keep it increasing, which is nice to see, and that follows the earning per share trend as well. Again, because they don't pay a high dividend, the payout ratio isn't that bad, 15%, and again in 2024 it's predicted to be 17%, so this is going to be a long-term company if you're looking for dividend, but this company can do quite a lot with its capital, and I kind of like it as a growth one in my portfolio. So we can see the breakdown of this company. So the general public, that's like me or you, own 41.3% of this company, so we do have quite a lot of say in how this company sort of runs, and we can determine sort of where it goes. Alright, so now we'll head over to the income statements and the balance sheet to have a look at that, and then we'll get into a conclusion. Okay, so now we're on the income statement of Apple. So we can see back to 2018, going all the way to the trailing 12 months. We can see that total revenue has had an upward trend and sitting quite pretty at 365.817. This is all in thousands as well, up here. And we can see this sort of trend continue throughout everything that it does. Cost of revenue, we can see it's increased and sitting high now. Gross profit again, we've seen increase, and increase, so we like to see those. Coming down to net income, the same story continues. We've had a little decrease and then increase and increase. So all of this gives you quite a lot of confidence in the company going forward. If you can keep this trend going throughout, then I believe this company will do well, and I personally aim to hold it for quite a while. And again, from the balance sheet here, we can see current assets up here and current liabilities down here. We can see that the current assets have outweighed the current liabilities all the way going forward, with the 2021 being the closest it has been for a long time. And then again, total liabilities and current assets, the total current assets hasn't outweighed the total liabilities, but we saw this in the previous analysis on Simply Wall Street, so it's just good to double check the numbers really. And then again we can see that the total assets outweigh the total liabilities, so again everything's good looking there. Okay, so now we're on the Trading 212. This is a platform I personally use, so it has a few like analysis tools in here that I like to look at as well. There's financial summary, which tells you sort of where the company's going and what it's been doing. We can see that Apple revenues increased 33% to 365.82 billion. Net income increased 65% to 94.68 billion. And the revenues reflect America's segment increase of 23% to 153.31 billion. Greater China segment increase, European segment increase, foreign segment increase. Just a lot of increases, so this company is going in the right direction. You can see the same. It's just breakdown by chart as well, bar graph even. You got revenue and net income. You can see that the net income has been slowly growing. That's great. And then again, same with balance sheet. That's just an easy way to sort of see it visually if that's how you do it, more than numbers. And then in all ratios, there's quite a lot of important information that I like to look at. One being free cash flow per share. So you can come down here, you've got free cash flow per share trade 12 months of $4.65, with the dividend share being 85 cents. So we're not really worried about that because the payout ratio we saw was great anyway. You can go into management effectives and see the return on assets, return on equity, and return on investments, all being quite decent. Financial strength, you've got free cash flow trading 12 months of 78.49 billion, so it can pay off quite a lot of its debt just like that. And I don't think this company would have issues raising capital to pay off that debt if it needed to do so. So I'm not worried about the debt. And then we've got the payout ratio again. We've looked at all this already. Alright, so now for the conclusion. Okay, so in conclusion, this company I see as being around for a long time. The brand that has built, the loyalty of its customers, that symbol just above my head, it represents so many things that a company should be. And this company has done a great job keeping its balance sheet good, keeping its growth good, and it's always looking to improve in new aspects. So like I said, the new car that it's trying to build will be the biggest thing that it will do now. So if you can get this company at like a sort of better value than what it is now, just buying those little dips, then I would recommend that. I mean, you could buy it now, it's a little bit overvalued, so that's up to you and your risk tolerance, your perspective of this company. I've made a whole video about that, discussing that topic. Card will be on screen now. But I personally hold this company, I keep buying into it, and that's what I will continue to do as part of my balanced portfolio. And yeah, that's really it for this company. It's quite a sort of blue chip, boring company. Like, it's not got crazy developments going on. Not much has been heard about that new car yet, so kind of it's all speculation a little bit. But I know they have hired people on that used to work at Tesla and things like that to work on cars for them. So I hope you enjoyed the video. My name's been Exo. Like, comment, subscribe, all that good stuff. Check out all the links in the description. You got Trading 212, like I said, platform I use. Use the link down there and get a free share worth all the way up to £100 when you deposit £1 on that platform. And then for your crypto needs, you got Blockfi and Gemini. Gemini is where I buy my crypto, and then Blockfi is where I store it for additional interest. And I'll catch you in a bit. Peace out.